Right now I'm into my trade which I took yesterday. This analysis was in GBPusd. This is my blocker. He's called deriv. I'm using him. So without not going into anything, I'm going to be showing you how I managed to raise up to 744 or 700 using 551 0.2 0.2. Okay, let's get started. Okay, this trade I entered yesterday from, let me see, let me see, it was around 2006, all of them, I think. Yeah, 2006. Okay, when I entered this trade I was around here. Let me put it to 1 hour minute time frame so that I can really trace it really. Let me go back to the okay, to the this our time frame. As you can see, it was at around yesterday. Yesterday it was a Thursday. Yesterday it was a Wednesday at around 2. Wednesday at around 2. Wednesday at around 2. At around here. So I entered my trade at around here. So why did I enter this trade? When I looked at the bigger time frame, I started. For me, what I do, I start from the higher time frame. So when I got my higher time frame, I saw that at the 1 day time frame, what you have to know that always the market follows the higher time frames or gives it respect, like the trend and the other circumstances like those. But in the higher time frame, always the market supports it or gives it respect. Like I saw that my market at first it was in this direction, then moved into this direction, then moved into this direction. And here I was. For me, what I knew that my market was going up and down like that, like as I've shown you. Okay, let me remove those directions. And I show you. And I zoom in where when I reached at this stage in the daily time frame, I saw that my market, this price action, because I'm gonna be analyzing price action, I saw that, as you can see, price had already made what I called support at around this here. So price, what it did, it wanted to break it throughout. When it broke out, it then entered also my resistance. It entered into at this point here, this point right here. It then came into then entered again. When it entered again, then for me, what I first do, I first draw the trend line and see where is it really going. So I draw my trend line. This line, as you can see, I drew it. When you are drawing trend lines, you go to the higher time frame, because always the market, you have to know, always the market follows the higher time frame. Let me first remove this one because it's not needed. So I got here when I reached this stage, because all of this as it formed when I started the form. So let me first remove this trend and I show you. I first draw trend lines, and when I'm drawing trend lines, I use the wicks like that. I always use the wicks when I'm drawing my trend line. I always use the wicks. When I connect the wicks, I saw that the market had already gone out from the trend line. It was like escaping the trend line. So I draw the other one upper. So I draw the upper one right there. What I saw something like a wedge, and it's called a buy a selling wedge, like when it broke it to the down, and the price broke it, and it failed to enter this block, this one right here, the upper one which I drew right here, this one right here, this one right here. The price failed to broke it. This is my first profit, this is my second profit. But this last one, the price failed to go into it because it's fast. When it broke, it's just sold down and sold down one. And also, if you can see, it even reached my take profit first. But I wasn't around. I was somehow busy. I didn't see it because for me also, I'm the no stop place. I don't put stop losses onto my thing. I just trade. I like to trade manually. I just like to trade manually. So when I reached at this step, I saw that price was going to go because it broke the trend line and failed to get back into it. When it failed to get back into it, it was around this liquidity time. As you can see, this first stop, my first stop profit, it was around here, where I had around here when I had to see that my trade had to reach the other side. This is called the liquidity gap. This space here, around here, this line as it goes is called my liquidity gap. Like if I was promised by my head, so that if the price could go and reach this side, I'll be closing that liquidity gap, and then it did. But according to for me, what I mainly use, I use the price action methods. I use my analysis of the trend lines. I first saw the trend lines and looked at, and when I was taking this trade, I looked at the price was going from the uppermost Bollinger. Had reached the uppermost Bollinger. I took this trade when price was around here in the middle. So I knew that was going down because always price follows the. Yeah, that's what I have for today. And this blocker is called deriv. As you can see, it's really good. His spreads are small. Everything is really good about this blocker. So that's all I have for today. That's all I have for today. That's all I have for today. As you can see, this blocker is really good. His spreads are too low, and it also offers another derivative so that you can also trade in the holidays. This blocker is called deriv. Okay.